Have you ever wondered why gold, the world's most trusted safe haven asset, sometimes loses its shine when big political events are about to occur? Hello and welcome back to Today in Finance. In this video, we're going to break down why gold futures fell this week, even when the whole world is closely watching the upcoming meeting between US President Donald Trump and Russian President Vladimir Putin. Don't worry, we'll keep everything in very easy to understand language so that you know that what's behind this drop, what does this meeting mean for gold prices, and so many other things. So without further ado, let's get right into today's video. Gold futures ended this week lower, surprising many investors who were expecting the prices to rise ahead of a major geopolitical event. Usually, before big political meetings, people run towards gold because it is seen as a safe haven asset against uncertainty. But this time, the opposite happened. Instead of climbing higher, gold slipped because traders believed that the meeting between Trump and Putin might calm tensions rather than worsen them. When there's less fear in the air, investors feel less need to buy gold. Gold has always been the go-to asset in uncertain times. When wars break out, economies shake, or political risks rise, gold tends to shine. But this week, safe haven demand was weaker. Investors seem to have more confidence that things might not spiral out of control. They also turned their attention to the US dollar, which has been strengthening. Since gold is priced in dollars, a stronger dollar makes it more expensive for buyers using other currencies. That reduces global demand. And on top of that, stock markets showed strength this week, and investors often prefer higher risk, high return assets like stocks when confidence improves. When two powerful leaders like Trump and Putin meet, the world watches closely. These big meetings can influence the market in unpredictable ways, and if talks go well and relations improve, it reduces the perception of risk. And when risks feel smaller, gold loses some of its shine because investors start putting their money in riskier assets. On the other hand, if tensions rise or disagreements dominate the meeting, the opposite could happen. Gold could surge overnight. This week's drop shows that traders are now betting on a calmer outcome, at least for now. US interest rates. Interest rates in the US play a huge role in gold prices. When the Federal Reserve hints at raising rates, bonds and saving accounts become more attractive because they pay interest. Gold, on the other hand, does not generate any income. You only profit if its price goes up. This makes gold less appealing when rates are high, which puts downward pressure on its value. Inflation trends. Gold is often seen as a hedge against inflation, meaning people buy it when they fear prices will rise too fast. Recently, however, inflation numbers have been cooler than expected. That has reduced the urgency for investors to hold gold as protection. With less inflation pressure, demand for gold naturally dropped this week. Energy prices. Oil prices also influence gold because they are tied to inflation. When oil prices are high, inflation often rises, and that can push investors toward gold. But this week, energy prices were lower, easing worries about inflation. As a result, investors feel less pressure to use gold as a shield, adding to its decline. For everyday investors, this week's gold drop is just a reminder of how quickly markets react to global events. When fear is low, the gold demand drops, but that doesn't mean that the gold loses its importance. For long term, it still works the best as insurance against sudden crisis. That's why it's best to treat gold as a part of a balanced portfolio and not as a quick trade. If the meeting goes smoothly, a friendly outcome between Trump and Putin would likely keep gold under pressure. Investors would see fewer risks and shift their money into stocks and other assets that promise higher returns. In this case, gold could drift lower in the short term. If the meeting sparks tensions, any sign of disagreement, sanctions, or conflict would quickly send investors back to gold. Historically, gold has always spiked when political uncertainty rises. Traders would see it as the safest place to park money until tensions calm down. If US interest rates rise faster, another factor that could shape gold's path in US interest rates. If the Federal Reserve raises rates sooner or higher than expected, bonds and the dollar will attract more money. That shift would keep gold weak since investors would prefer assets that generate income. Gold may have fallen this week, but it still remains one of the world's most important assets. Political meetings, central bank policies, global events all play a major role in shaping its price. The Trump-Putin meeting could either continue this downward pressure or flip the story completely if tensions rise. For everyday investors, the lesson is simple. Don't think of gold as a short-term win or loss. Instead, think of it as a long-term protection against the unknown. The real question you should ask yourself is, are you investing in gold for short-term gains or holding it for long-term stability? With that being said, this brings us to the end of this video. I hope you found this video helpful, and if you do, make sure to give it a big thumbs up and subscribe to my channel for more financial insights. With that being said, take care until next time.